The worst case scenario is starting to play out in the market, and if Trump doesn't make a deal, something is going to break.
What does a lot worse look like?
Oh, it looks like '08 is what it would look like. I'm not saying that we're going to do that.
Right before a crisis, credit spreads explode to the upside, representing the increasing probability of corporate defaults. Investors are basically dumping corporate assets for government assets. Now, this is flight to safety behavior, but the problem is those government assets are also tanking. When recession risks rise, government treasuries are supposed to be the safe asset.
The bond market is very tricky. I was watching it, but if you look at it now, it's
Now, part of Trump's plan was to slow the economy, to scare people into buying these government assets so interest rates can move lower. But that plan blew up in his face, interest rates went higher, and he responded with a 90-day pause on tariffs. And this is what pushed the index to have its single best day in 20 years. The bull market is back. Except the next day, it turned out to be a giant short squeeze. Short sellers were forced to remove their hedge, the market exploded, but this was not the beginning of a V-shaped recovery. The very next day, we got one of the best inflation reports in years, and the market still couldn't move higher. Inflation is breaking, but the market still couldn't get it up because there are bigger problems.
It's about what's coming next, and that's tariff-driven inflation, and that has changed the dynamic. We got a great PPI report after a great CPI report, and we got no movement on the bond market on that.
There is a lack of liquidity in the U.S. Treasury market, and the last time we saw interest rates move up this quick, we had a banking crisis March 2023 SVB. And the Fed responded by injecting liquidity, creating the Bank Term Funding Program. But today, they're delayed by the expectation of tariff inflation. And that's why Trump will be forced to make a deal soon. Trump needs a huge buyer of U.S. Treasuries because that's how you fund the government. And if there's more buyers than sellers, the government's interest payments come down. But Treasury investors are demanding a higher and higher premium to invest in the government. It's almost like they don't trust the government can pay the interest. As long as there's a lack of buyers, this pushes up interest rates, and that includes mortgage rates, which is the exact opposite outcome that Trump was aiming to achieve. So he was forced to make a deal or face a debt crisis. Now, China is one of the biggest holders of U.S. Treasury debt. And the word on the street is that China retaliated by dumping their treasuries.
We've had a 50 basis point rise in the 30-year right now. And by my records, that's going to be the biggest weekly rise since 1987.
And the other theory is that hedge funds simply blew up. See, hedge funds can leverage